have had a very interesting conversation with Kalpana Morparia, Bharat, Iyer and Sajiid Chenoy of JPMorgan. But we have time for one last comment from each of them. So let me start off with you, ma'am. The Modi government, after coming into power, has not done anything incrementally compared to what analysts and what the street was estimating. It's been a bit of a limbo in the last couple of months. What next are you expecting from the new government that could perhaps further bolster the reform process?
I think it will be very gradual steps. Sajiid says there's 1,000 steps taken as quietly as one possibly can. So it will be much, much more gradual. We certainly hope the insurance bill gets passed because that will definitely bring in a lot of core FDI into this sector. You will see listings of some of the insurance companies come through. We certainly hope that government clarifies this confusion between FII and FDI. I mean, foreign money is foreign money. And you have a limit of 74% in banking. Let's just stay with that limit rather than say, you fill this bucket, now you can't do that. You've seen what's happened to some of the stocks. They've lost weightages in the MSCI index. That does not bode well for a country that says we want to attract foreign investment into the country. So at least these two in the financial sector is something I look forward to.
If Mr. Aditya Puri is listening to you, I'm sure he's going to send you a thank you note. But clearly, these are unnecessary troubles that which can easily be resolved. You don't need a cabinet. You don't even need a parliamentary okay for it. But Bharat, this is a question we die to ask everyone. What are the kind of index returns? Your analysts, your compliance rules don't allow you to mention stocks. But can you mention an index level?
Sure.
There are people who bravely mention 8,500 and 9,000. What is a 12-month return on that?
I think as I mentioned very early on in the show, we're looking at returns of about 12 to 15% through to the end of this fiscal year. Okay. And that's, as I mentioned again, premised largely on earnings growth forecast. Because we're trading at 16, 17 times forward multiple, which is a very reasonable multiple to be trading at. But earnings growth will take this market forward.
And what about a downside in the event of some risk-off for global reasons?
See, it will really depend on the kind of risk-off we see. Because, the one vulnerability we still have, let's face it, there are a lot of positives out there. A very decisive mandate, a great policy environment, very good administrators out there. I think the one vulnerability that's still there at this stage in the economic cycle for us is that we're running low on savings and on capital. So the dependence on external capital is a vulnerability we have to note. So, which is again, as I mentioned earlier on in the show, if you have a disruption to global liquidity for any reason whatsoever, then, the downside is going to depend on the extent of that disruption. But I would expect that India continues to outperform in relative terms.
Okay. Well, that actually brings the question to you. He spoke about very correctly, savings and capital still being scarce. I mean, where were we running at, 34 and 36% in terms of savings and investment, and now below 30%. Sajiid, when do you see the macros getting corrected enough? The governor correctly alluded to positive real interest rates after a very long time. So, what is your sense? When do savings actually pick up and go beyond that 30-32% mark?
So if you look at household savings have not dipped as much. What's happened is financial savings of households have collapsed and physical assets have increased. So I think, therefore, it's all the more important that the RBI stick to its guns. If we can reach the 6% target in 2 years' time, we're looking at a 2% real policy rate, perhaps a 3% real rate that households face. That is what you need to transform physical assets back into financial savings. I think that's critical. The second is corporate investment has gone from 18% of GDP to 9%. Now, in 4 years. Now, for me, the key here is going to be execution efficiency on the ground, not so much legislative successes in Parliament. The top 100 projects that we studied, 65% are stuck because of land issues and coal issues. So if in the next 3 quarters the government can make incremental progress on environmental clearances, some of which you've seen yesterday by the cabinet, make progress on coal and Coal India's efficiency, make progress on liberalizing land acquisition procedures for PPP projects, those are the kind of things that will de-bottleneck projects on the ground. That, for me, is the biggest driver of a pickup in the corporate investment cycle. I'll end by saying we focus so much on rates. In the biggest growth phase India has had, real rates were far higher than they were today. So that will not be a constraint. If you can focus on implementation efficiency and make sure financial savings are induced, your current account doesn't balloon when investment picks up, we'll be in a very good batting wicket.
Okay, I have just one sector-specific question for you, Bharat. Since Lata has recommended a higher bonus for you, since you have given some of the best-performing sectors, IT, metal, cement in the past, leave us with the sector that you think that will outperform the markets here on for the next, say, 6 to 12 months.
On a 12-month basis, I think, the sector I would be really positive on would be financials. Because I guess, if all the reforms that we are talking about, all the implementation schedules we are talking about, if all that goes right, then the one sector that should really lead the charge is financials.
You're giving me the cue so nicely. I just wanted that last 2 minutes to ask Mrs. Morparia about the changes in the banking sector. The governor has come with a bunch of reforms. Tell us what you like. Do you like the payments bank concept? Do you like the small banks concept, on-tap licenses concept? Do you like his, joint lender forum and the quick recognition of NPLs? Just the finance space. Do you think a year down the line, how will the scene look a year down the line?
I like the payments bank concept a lot because that enables you to get financial inclusion at a relatively low cost without the associated risk on the asset side. Because
could be game-changing?
Investing. I think it could be game-changing. It will be a fixed line to mobile phone switch-like moment for India. I like the differentiated licensing concept quite a lot. I know they haven't come up with detailed guidelines, but he's made that intent. That is something certainly that a lot of foreign banks are looking forward to in terms of differentiated licensing. The joint forum and all of this, I don't think we really needed Reserve Bank of India and the governor to do that. As you know, the lenders figured out the CDR. RBI did give a nudge, but the CDR is a well-functioning system. DRTs are acting fully functional now, and the SARFAESI Act does have teeth. So it's good for the central bank to kind of encourage that, but it's really for the lenders group to take that initiative and take it forward.
What about public
I'm not
sector?
so hot on the small banks.
Okay. What about public sector bank reforms? I mean, we had the banking secretary speak about some few steps of autonomy that they are contemplating. I think within a month we're going to hear fixed terms for chairmen. I mean, those are, I guess, for them the low-hanging fruits. But do you see, given Mr. Modi's record in Gujarat and with Gujarat PSUs, is that an area that you would ask Bharat to watch out for?
Absolutely. So governance reforms there is something that all of us have advocated, and we truly look forward to that. I also welcome consolidation in this sector. That will augur well. There's been talk about consolidation in the public sector. And we have to bear in mind that despite the advent of new generation private sector banks 20 years ago, 70% of Indian banking is still with the state-owned banks. So we should never ever dismiss this lot.
Okay. Well, we have run out of time, not out of questions, but Mrs. Morparia, Sajiid, Bharat, thank you very much for dropping by and enriching our understanding of markets, economy, policy, helping our viewers make up their mind.
And in case you get that bonus, then you know who you need to share it with, right?
Thank you so much.
Okay, thanks so much, guys, for joining us. It was a pleasure speaking with all of you.